Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, good morning. And what's the word, Nigel? You were singing a song. It's Decembering.
It's beginning to look a lot like Christmas.
Already getting the colors of the season, right? Nigel's all set. But before we get to the end of the month, there is the beginning of the month, and there is such a ton of news flow, right? I mean, local and global, and the GDP numbers and some changes in the cess on tobacco. Whew, lots to go over.
Well, that's right. Markets will be tracked, but a lot of macros flowing in. A lot of big central bank action is what we are tuned into, and that GDP number looked good. Is it a good thing for markets or not so good? Well, we'll find out.
The real number is good. The nominal one, perhaps,
not
a little,
soft.
Softer, right? But let's just take it from the top. As we'll, of course, talk about the GDP numbers, but also there's a lot lined up here over the next 4-5 days, actually more. First things first, the sentiment and the mood and the all-time high. I think a clear discrepancy. The Nifty hit a new all-time high last week. Market was up about 0.6% Friday to Friday, but the mood remains watchful. I mean, actually, I would even say like slightly pensive, especially as far as broader markets, portfolios, mid and small caps, etc., are concerned. And I think this number, it's 2 days old, but I think it's still relevant, would not have moved around so much. 170 out of NSE 500 stocks are only, actually 170 out of 500 NSE stocks are higher from the time that the Nifty actually made a new all-time high, September last year. So that kind of talks to the overall action in broader markets. And, we'll have more on this a little later. Now, GDP numbers, and this was, of course, the bright spot. The real GDP growth accelerated, 6-quarter high, 8.2%, third quarter. This is July to September. But the nominal number actually decelerated a little bit. The deflator, inflation has been running very, very low. And lots of conversation around this one. Remember, for markets, what matters is not the real number. For corporate earnings, what matters is not the real number, but the nominal number. Corporate earnings are related to nominal GDP growth, and you're tracking under 10%. This will be the third straight year if we actually end up somewhere there. So I think, it needs watching. In terms of estimates and what the street has done, I was looking at what Goldman, etc., have done. They've all taken up their estimates for the full year a little higher. Now, the other data point which came, and I'll come back to this a little later, is that, so this is July to September, but we also got April to October tax collection numbers, and tax collection is running far lower than what was budgeted. It's around 4-5% compared to 11-12% which was budgeted. So that's the other thing which I think is important. Perhaps it's a slightly more recent since it covers numbers till October. Now, November auto sales numbers today. Again, one more data point which markets will get, which basically will tell you if the GST-induced sales momentum that we saw pre the GST cut becoming effective, and of course after it, is continued into the month of November or not. Today is the 1st of December. So we'll get those numbers over today and tomorrow. Winter session of Parliament kicks off today. There is, of course, we've reported on a bunch of them. Insurance Amendment Bill is the big one, and we've reported on it extensively. But there are 10 key bills in total which the government is looking to pass. And yesterday evening, we reported that the finance minister essentially is going to introduce a health security, say national security cess bill in Parliament today. So from what we understand, and there is still more clarity which we will get when that bill is tabled, but this will replace the compensation cess with this. So in terms of effective tax rate, there's no change, and the stock in focus will be ITC, tobacco companies, by the way. But there's some talk about whether, even though the effective tax rate remains same, the tax will be applied on the total capacity and not the produce and not the production. So, how will companies respond? Will they bring down rated capacity and things like that? We'll discuss this. Russian President Putin to visit India from the 4th, basically 4th and 5th, he's going to be here. 5th, he's going to meet Prime Minister Modi. And India is trying to push a new arms deal. So, again, something which, and we talked about this yesterday. For everybody who's waiting for a US-India trade deal, I think it kind of gets pushed out a little bit more with the Russian president here. RBI policy decision on Friday. A lot of chatter whether with the 8% plus and a beat on GDP, a rate cut is warranted. but I think the markets are expecting a rate cut nevertheless. So that is something. In terms of the Fed and the FOMC, I think markets are now almost fully pricing in a 25 basis point rate cut. That's on the 10th of December, which is next Wednesday. Not this week, but the next week is when we will see that. Now, yesterday, OPEC Plus essentially agreed to stick to its pause plan. No more output increases during the first quarter, which is January to March, because they're talking about too much supply in the market, etc. U.S. Secretary of State Marco Rubio called Ukraine talks productive as the Trump's special envoy is headed to Russia. There is that thing which is going on, but nothing very firm yet. That's it. I mean, so lots of local news. Is some of it really market moving in that sense? We'll find out. Auto sales, etc., especially, and of course, clarity around that cess. But otherwise, I mean, the mood, of course, remains watchful, as I said, especially in the broader market. I'll just tie in with the levels here. So all-time highs, 26,310 for the Nifty. Immediately that's the number to take out. Support is a 20-day, which is, lagging behind, 25,886. The Nifty Bank record high is 59,897. So that's the level on the upside, and the support is the 20-day, which has moved up to about 58,618. GIFT Nifty will give you a sense of how we like it to start, and then we'll pick it up from there. 100 points, 120-odd points higher on the GIFT Nifty. Nigel is standing by with the F&O positioning and the stats as we start December. Nigel, over to you.
Well, the GIFT Nifty is suggesting a big bump up, and the bulls will hope that we end closer to the upper end of the range. First up, the markets will be reacting to the GDP number, and in absolute terms, it's better than what the street was working with. In fact, Macquarie points out that it's at a 6-quarter high, which is good news. However, the probability of a rate cut now falls from around 65-70% to around 60% or thereabouts. So will we see that rate cut, which the stock markets are expecting at the end of this week? That's going to be the big question. And that lower inflation number is always going to be a double-edged sword, right? Because you'll be celebrating lower inflation, and that gives the RBI the room to go ahead and cut rates. However, nominal GDP at high single digits means that earnings growth can be only so much. So those mid-teens earnings growth comes in doubt if a nominal GDP is in high single digits. So that's about the macros. What about the flows? Well, the FIs, they continue to remain sellers. Now the selling has got a little bit bigger, 3,500 crores. The DIs, though, they're taking care of that, and they have, institutions net were buyers. Not too much is what we saw in terms of movement from the FIs on the index futures. They continue to remain net short, 81% of their positionings on the short side. However, in absolute terms, it's much lower than what we have seen. Remember, in the last few months, we have even seen 1.9 lakh contracts on the short side, 1.6 lakh contracts on the short side more recently, just around 10 trading sessions ago. So the FI is short, but not aggressively net short like we have seen in the past. What about the options data? Two strikes call for attention, 26,300 call, the 26,100 put. Premium on both those two, around 50 to around 60 rupees on an average in Friday's trading session. And writers have been making money because the markets have gone into a bit of a range-bound mode. So you just punch in, both these two premiums, and you'll see on the upside that 26,350 going by the options data becomes a bit of a resistance. The recent high is something that you'll be tracking, 26,310, and we could visit that at some point, at some part of the day during today's trading session. In terms of support, the options data suggests 26,000, 26,050. That's going to be the first support level, while the 20 DMA, that becomes the important level that you don't want to breach on the downside. The Nifty Bank has been leading the way. That needs to continue to do so. The 20 DMA is rather deep on that particular one. Cues that we're looking forward in this week itself, the domestic cues that I'm talking about, auto sales numbers start trickling in, gives us a sense about, how the markets are looking. So we'll have to focus, on that in terms of the auto space. GST collection number as well will be due today, so we'll keep an eye out on that. And towards the end of the week, the RBI policy will be coming out. So hopefully we get that rate cut from a stock market perspective. But more than the headline index, you need to keep an eye out on the broader markets because that's been crumbling actually. Stark underperformance is what you've seen from the mid as well as the small cap index. And if you ask me what would be on your wish list, I wouldn't mind the Nifty consolidates a little bit, but we start seeing performance from the mid as well as the small cap space. Given that we have big central bank action due in the next week or so, both on the domestic as well as on the global front, you'll keep an eye out on base metals, and overnight you have silver that's moved to a record high, so that's going to be important. The plays are Hindustan Zinc, the only direct play out there, Vedanta because it's a parent of Hindustan Zinc, and since copper as well has made another high, we'll keep an eye out on Hindustan Copper. So base metals and metal-related stocks will be on my radar.
Okay, fair enough. So those are the cues to watch. By the way, while we're rejoicing that strong GDP print, the macros out of China this morning are not that great. The private sector manufacturing report has come in. It's lower than estimates for the month gone by, and also it's showing some contraction. So a lot of the Asian markets have turned. the mainland Chinese market and the Hong Kong market. Hong Kong is still up 0.5%, but it's off, well off the high of the morning. And Japan, for instance, some of the bigger markets like Japan, down almost 1.5%. So mixed picture across Asia. We'll pull up the implied open. The question is, will the bulls find their mojo back? Because last week, while we hit that all-time high, the momentum was missing. So will that momentum come back in? That remains the biggest question. Also, what remains the biggest question is what next for the India-US trade deal? And here we've got some clues. Commerce Secretary and India's chief trade negotiator, Rajesh Agarwal, has highlighted that two parallel negotiations are underway with the United States. In a conversation with the CNBC-TV18's Shireen Bhan at a FICCI event, Agarwal said that they were optimistic about a framework trade deal by 2025 end to address the reciprocal tariff challenge.
The assumption is that a trade deal will be beneficial for Indian exports only when there will be addressal of both 25% tariffs, not only the one which is a trade tariff which has been imposed on trade in lieu of the lack of trade deal, but also the other 25% tariff which have been imposed for some other geopolitical reasons. Until unless both are addressed together, it will not mean a meaningful deal for India. The stocks are still on, and it is because these are two negotiations also. There's a larger one also which is going on. So talks are on. Our teams are engaging virtually on a regular basis. There are virtual sessions every week on some issue or other. Let's wait for some time. You may see the visits can happen either way. Whether we visit them or they visit us. They were in pretty lockdown for some time, 45 days or so. Now they are out of lockdown.
Okay, so that is the Commerce Secretary telling us that maybe we can expect some positivity on the trade deal in this calendar year itself. So before December ends, that would be quite the Christmas present. Well, let's discuss this and more with Rahul Chadha, founder and chief investment officer at Shikhara Investments. Rahul, thank you so much for joining in. You know, it's not been the year of India, but we are hoping that 2026 turns out to be different. So let's get your broad thoughts in. We had this very strong GDP print come in. Though economists are highlighting that the second half might not be as strong as 8%. And then this hope that was a missing link, actually. Exports, even in the Q2 number, exports were obviously weak. So then there is this hope that we finally get that trade deal done, at least knock off the additional 25% tariff. How are Indian equities placed, you think, at this point?
Yeah. So I think, Sobi, as you said, the Indian markets underperformed the region considerably. And coming into the Q4 of this year, we were taking some money off our China exposure and adding to India, and somewhere closing those underweights. And again, one saw in the October data, after a long time, we had good earnings beats from banks, from Reliance, and across the board pickup in consumption, which came through the GST rationalization. So that was positive. Again, questions remain that, look, can the recovery build on this and be stronger next year? So that's to be seen from here. On the strong GDP print, I think what matters for corporate revenues and earnings is the nominal GDP with a multi-year low inflation that we have in India. We've seen nominal GDP, as you guys also discussed before, in a high single digit. So something that limits the corporate revenue growth and kind of limits the earnings growth here. But again, I think India is done with the underperformance vis-a-vis rest of the region. Now the performance is going to be in line with the region. The important thing is that, look, everybody was expecting this trade deal to happen first by Diwali. Then it was almost by November. Hopefully, the additional 25% tariffs are withdrawn by the end of this year.
Yeah, no, absolutely. Rahul, hi, good morning. Prashant here. And you're right. Actually, the by December, from what the Commerce Secretary says, is going to be the penal 25 and then, of course, the other 20, reciprocal 25 as well. So he was hopeful that both will be negotiated lower by the end of December. We'll see something. But the BTA will take a lot of time. The treaty itself, a trade agreement itself will take a lot of time, is what the indication was. Rahul, the other factor is this the slightly more macro-ish point here. But I mean, you know, we've all been, the GDP numbers are strong, but the tax collection growth, did you look at it? April to October, tax collection growth is 4.5%. The budgeted number is what, 12%? So there's a big shortfall. So, you know, it'll have to be made up via some, I don't know, a disinvestment or RBI dividend or what else, Rahul? And any implications for markets?
what you're saying here, Prashant, is coming out in currency. If you look across the region, most Asian currencies have appreciated against the dollar. So we've only had rupee, which has depreciated 3-4% against the dollar. This is despite having seen reserves move up considerably over the last 12, 15 months. So I think this higher deficit, some pressure on the tariffs is coming through the currencies, and which is why, despite India being a strong structural story, despite government doing all this, which is we saw whatever's happened again on the GST rationalization, the labor reforms recently. So it's a policy overdrive over the last couple of months. The FIs are yet to be that exuberant. So I think somewhere one needs to see this recovery fully kind of a play out. Look, I think the bigger is for us going into 26 is what does this AI-led disruption do to job creation in the formal sector? Any which way we've seen over the years, it was hard for the formal sector, large companies to create jobs in India. A large part of the jobs were created in the gig economies. So, do you see a big displacement coming through? That's to be watched for 26.
All right, Rahul, final question before we let you go. Since you briefly spoke about the FIs, the good news is at least that selling intensity has come down, and people argue that, the flows actually have been coming into the primary market. But do you expect FIs to turn buyers in the Indian secondary market? Because that's going to be important. Otherwise, most of the liquidity that we're getting is being sucked up by all these IPOs. So that's point number one. And point number two, just wanted clarity. So you're working with an RBI cut at the end of this week?
Yeah, I think that's still a mixed bag. With this strong print, maybe if not this week, then in the next meeting. So we've seen RBI being slightly proactive with the cuts this year. So the economy seems okay. There is a good demand momentum back in the economy. So maybe they'll keep some gunpowder dry for future. From a FI perspective, I think FIs will see how the demand momentum continues in Q1. We see a strong rural recovery kind of a come through. If we see that come through in urban consumption plays also, if somewhere the tariffs are reduced to 15-20%, which the rest of the region kind of pays, I think that's where FIs get bullish. And again, the broad view is money moves out of developed markets where the sovereign debt crisis is really kind of coming to the forefront. So money moves to the emerging markets. And then depending on wherever the strong fundamentals are there, wherever the earnings trajectory is strong or is inflecting, those markets will get higher allocations.
Rahul, just one last quick, briefly, if you can run us through as a fund, as a long-term investor here, what are you doing now? Are you dramatically changing how you allocate as we head into 26? And where are the big opportunities if there are?
Yeah. So if you look at, I think the growth comes out in semi-urban India, tier 2, tier 3 cities. So the opportunity to play that is through mass consumption plays. I think there's a big opportunity in manufacturing. And this manufacturing would be companies, obviously, which are catering to the local economy, but more importantly, catering to the exports market. So you see, you hear a lot more incidents of European OEMs, whether it's in the aerospace, whether it's in the automotive, looking for alternate suppliers apart from their local suppliers. And I think the Indian companies, which have a good 10-15 years background history, can gain share over there. So that's a story which is there. We continue to like the healthcare space. Hospitals is something we've liked. I think what one wants in these names one is playing is an added export optionality, because look, growth is not going to be as strong as it was for last 4-5 years. It's going to be better than rest of the region, but again, valuation in India are also at a premium to rest of the region. So you want somewhere of an added optionality of either exports or new segments such as aerospace or something like a power infrastructure place for these companies.
Okay. Good chat. Thanks very much, Rahul. Appreciate you coming on here this morning on CNBC-TV18. Look forward to the next one. Well, I think we want to just spend 2 minutes talking about the GDP numbers and how to interpret it for those of you who are wondering what this means now for the monetary path, etc. as well. But Lata is here with exactly that. Lata, over to you.
Well, the GDP numbers are stunning. No taking away from that 8.2%. It gives a first half average of 8% because Q1 we got 7.8. And individual verticals, like for instance, manufacturing and services, both of them have fired at 9%. Within services, you have, a big sector called finance, real estate, insurance. That one's grown by 10.2%. Government services, public administration, health, education, defense, that category has grown by 9.7. I mean, these are all very good numbers. You want to look at GDP from the expenditure side. Are you spending it on investment or consumption? Both have done well. Consumption has grown 7.9%. Investment, or what you call gross fixed capital formation, 7.3%. It's extremely difficult to argue against these numbers. I mean, and that is reflected in the fact that almost all brokerages are now upping their full year forecast. I just give you a sample. SBI and Kotak have pulled it up to 7.8%, HDFC Bank to 7.3%, ICRA to 7.5%. So across the board, this is the full year number, okay? 8% is the first quarter, so people are expecting the current quarter also to be very good because of the GST-led consumption. So where is the worry? The first worry is, as you know, nominal GDP. You count many things in today's prices and then you deflate it. So this nominal GDP is what is seen in corporate earnings, because there you don't have a distinction between how many goods and services extra were produced, how much was it because of prices. You just get the profit number. So if the nominal GDP is growing at 8.7, it can depress earnings. What was the Nifty EPS growth? It was like 2 to 3% in second quarter. That is where we are talking about a nominal GDP of 8.7. But then again, mid-caps grew at 30%. So, there is confusion as to what really this nominal GDP can do to earnings. The second worry is this 8.2 very reflective? Because like I told you, about 40% of GDP is counted in real terms. How much iron and steel was produced, how much crops were produced. There is no problem of prices. But something like finance, broking, insurance, health, education, you take the current prices and then you deflate it. You only have a WPI number, which is about, for services, they've taken about 1%. Now, we all know that services, school fees, tuition fees, how much those have risen. So there is a kind of a disbelief. Is our real GDP really 8.2? Maybe it is a little less. The third worry is, of course, what will the Reserve Bank do? Can you really go to a rate cut when the economy is firing at perhaps the fastest growth in decades? When did we last see, 8.2 and 8.1, probably between the 2004-2008 period? So that is not a rate cut. Those were rate hike periods. Should you cut now? That is the big quandary. And actually, after the GDP numbers came, the bond yields went up by 5 basis points on Friday. So that's genuinely something which will roil all the consumption guys, autos, real estate, all of them will worry now, is the rate cut coming or not? That can be the dampener for the stock market point of view.
Oh, absolutely. Though, I saw some notes, some of the economists are quibbling, saying that second half may not be as strong. So maybe...
Almost everyone believes that second half won't be strong because, you had CapEx was complete, government CapEx was completely a first half thing.
Front-loaded, yeah.
And there won't be money, as, Prashant has been saying, tax collections in the second half are likely to look weak, so that will not come. Exports were front-loaded. Yeah. Base was very low in the first half. So, yeah, definitely we are not getting an 8%. But then full year is still going to be above 7.
Yeah. So, well, let's see if the RBI does want to oblige with another cut or not. We will have the answers by the end of the week. Thank you very much for that, Lada. Well, let's quickly tell our viewers what all we have lined up on the show today. Coming up at 8:35, the management of Studs will join in. Recent listing, and they've come out with their first earnings after the listing. We'll find out how the corporate performance is like. At 9 a.m., we'll be having with us Deloitte India's MS Money to talk about a likely cess on sin goods. It's a new bill altogether. National, health and security cess that's likely to be introduced in the winter session of Parliament. We'll talk about that. At 9:20 a.m., Dheeraj Agarwal of Ambit Investment will be joining in. He's our market master of the day. At 9:35 a.m., we get chatting with the management of L&T Finance, talk about the company's outlook for the rest of the year. After that, NSE's Sriram Krishnan will be with us. We'll talk about the exchanges, of course, Q2 performance, but more importantly, how are business trends looking like, volumes, transaction charges, all that and more coming up with the NSE top management. Towards the end of the show, Lata comes back. Today, with the CNBC-TV18 Citizens Monetary Policy, she will, of course, discuss what else but the expectations from the December 5 RBI policy. Okay, we'll take a quick break on that note. Coming up on the other side, our research team standing by with the key stocks to focus on today. Welcome back. As we've been telling you, Qs are a little mixed across the Asian region, but the implied open is telling us that the bulls could be back to their winning ways. Look at that, 100 points higher. The bulls have to take out 26,300 convincingly for the conviction to set in that indeed these are all-time highs and the momentum is coming back, because that was the one thing missing last week. That was momentum. Let's talk about stocks, and plenty of them on the radar as always. We've got our team standing by with the latest. Vinny, good morning. Let's start with you. Speaking of recent listings who are coming out with their numbers, Lenskart is topping the list today. Tell us, how was the performance?
Hi, so good numbers that have come in from Lenskart in Q2 FY26. Obviously, the first quarterly performance post the listing. When you look at it in terms of revenue, around 20.8% growth in terms of revenue on a year-on-year basis. EBITDA margins have come in at 19.8% versus 16.5% last year. And profits of the company have seen a growth of 20%. Obviously, international business, when you look at the division there, what has done well for the company? International business has seen a very good revenue growth. Margins have come in at 3.5%. Last time they were in an EBIT loss in the international business, so that has also turned on the EBIT positive side. Even the India business, that has managed to see growth of 31%, and margins have seen an improvement over there as well. Now, when you look at it in terms of the profit growth, why is it just the 20%? That is mainly due to higher depreciation and lower other income. That is the main factor that impacted the profits of the company, but still a very strong performance that has come in there. The eyewear units sold, that has also seen an improvement. 143 stores, that is something they've added in Q2. H1 same-store sales growth came in at 15.3% as well. And they're targeting more than 550 net store addition in India. Strong growth trajectory in terms of revenue and EBIT for Q3 FY26 as well. So positive commentary that's come in there. And good numbers, we'll expect green on the screen for Lenskart.
Okay, all right. Thanks a lot for that, Vinny. Well, let's hop across to Sud. He's here to tell us some stocks that are on the news today. Sud.
Good morning, guys. So auto sales have started trickling in. First, the company which has reported numbers is SML Mahindra, which was earlier known as SML Isuzu. Strong set of numbers, but we'll have to see if these numbers also have the details of Mahindra and Mahindra's commercial vehicles. That we'll get to know only once the details are out. But as far as total sales are concerned, it's up 102%. It has come at 1,087 units. Cargo vehicle sales have increased by 83%, and passenger vehicle sales are up more than 116%. Coming to Sterling and Wilson, it has bagged 5-year order from Adani Green Energy, and that order is worth 1381 crore, and it's in the region of Gujarat, that is Khavda Renewable Energy Park, and total with this total increase would be of 6 gigawatt, of which 5 gigawatt will be completed in this fiscal. Lupin has received US FDA approval for biosimilar Armilup Peg, which basically reduces the infection. But good part is total estimated annual sales for this biosimilar is more than $1 billion. Godrej Properties has emerged highest bidder for 5-acre land parcel in Hyderabad and will offer 2.5 million square feet sellable area, and estimated revenue potential is more than rupees 4,100 crores. So all the stocks with green.
So thanks very much for that. Well, more stocks with news flow. Upasana is here with just that. Upasana, morning.
Good morning. First up, let me start with Brigade Enterprises. The company has signed a joint development agreement to develop a premium residential project in Hyderabad, and the estimated revenue potential from this project is about 800 plus crores is what the company has indicated. Next up is Dodla Dairy, the company to receive IT refund of 22.2 crore for assessment year 18-19 and 21-22. Next up is Quick Heal Technologies. Company has entered into a contract with NFSU Research and Innovation Council for implementation of integrated cybersecurity solution, and the term of contract is about 5 years here, and the contract value is about 64.2 crores. Next up is Tejas Networks on our radar. The company receives 85 crore from PLI from the Ministry of Communications. And lastly, coming to NCC, on the back of order win, the company has received 3 additional incremental orders totaling 531 crore during the month of November 2025 is what the company has indicated. So all in all, going with green for all these stocks.
Okay, all right, got it. Thank you for that, Upasana. So we'll keep all of them on our radar as the market opens out today. For the time being, let's move on and figure out what the commodity cues are looking like this Monday morning. Manisha is joining in with the latest. Manisha, good morning. What's the headline?
It comes in from silver, absolutely, because we have extended rally into this one, trading at a record highs above $57.5 an ounce. And with that, it brings us to almost 1,75,000 rupees for the Indian markets. Well, MCX as it opens, we'll see newer prices coming in there. But it clearly has to do with a very strong investment buying. Chinese inventories are at a decade lows, and that clearly has been supportive. For the year, we are up by 98% when it comes to silver. Strong gains is what we're looking at in copper as well, with LME trading at all-time highs, US copper at around 4-month highs. Here as well, it is about planned production cuts, series of mine disruptions, which are keeping the prices on the higher side. What is also trading in the positive has been the crude oil prices. After 4 months of decline, December has started on a positive note after the OPEC Plus meeting on Sunday, deciding against earlier planned production rises in the first quarter of the 2026. And that clearly has been supportive for that one as well.
Okay. All right, Manisha, thank you very much for a quick roundup. So that's the commodity market action and the cues as we kickstart trade. Take a quick break. Coming up on the other side, we'll have Dharmesh Kant, Head of Research at Chola Securities, joining in. We'll discuss some fundamental stock ideas for the day.
Welcome back. Well, Stars Accelerators reported its first quarterly numbers post its listing. We have Siddhartha Bhushan Khurana, the managing director of the company, who joins us on the show. Hi, good morning, Sid. Thanks a lot for joining in. Well, you've done pretty okay, actually, in terms of growth. There's a good growth that we've seen, high teens, with the margins as well holding at around 19% or thereabouts. We're going to be focusing on the top points that we're tracking: strong auto sales numbers, premiumization in focus, and finally, the company's growth strategies. So give us a guidance for the year then. What kind of growth number should we be looking at? And margins sustainable at around 19%? Is there an upside risk out here?
Thank you for having me on the show. Yeah, I think it's been a pretty good quarter for us and also the half year. So if I compare H1 25 to H1 26, on the growth side, on the revenue side, there is a growth of about 6.5%. And on the PAT side, there is a growth of almost like 23%. So there has been a margin expansion. I think going forward, we think that the margins are sustainable. And I think on a year-to-year basis, it could be anywhere between 9 to 10% on the top line, that the growth we're seeing right now.
Okay, all right. And if you could give us some more color then. Penetration is still lower here in India. How do you see the trajectory move up? Give us a sense in terms of exports as well as average selling price. How do you see these parameters move in the time to come? Because this is something that will fuel growth. And in turn, if you get better sales numbers or average selling price, then that flows down into your margins as well.
Absolutely. So I think as you talked about, right, penetration in India has been pretty low. It's at the moment about 0.6 helmets per biker, which globally is at about 1.52. So we are actually less than half as compared to the global average. So going forward, we see an upside on the penetration in India. And I think on the export side, as you mentioned, right, there has been a growth year on year as well. And we're seeing a lot of traction on the export side as well. So I'll just give you a number. The helmet market globally has grown by about 6.5% over the last 5 years, whereas out of India, the exports have grown at 21%. So we expect these kind of numbers to continue for a while. And I think in terms of ASP, right, export helps ASPs. Our ASP on the domestic side is about close to 730 rupees, whereas on the export is close to 1600. This is the blended ASP across both the brands. So as exports increase, we see margin expansion and also revenue growth happening because of exports.
Siddharth, morning, Prashant here. Right now, a law says that with every two-wheeler, you need to, there's one helmet, right? Which has to be a part of the sale. Is there any change, mandating two helmets? And so that is one. And any other regulatory sort of imperative, which, because of road safety, etc., because of all the accidents which you foresee happening at the center or state level, which will be consequential for your business?
So at the moment, the law says that with every motorcycle sold, you have to give one helmet to the consumer who's buying the motorcycle. So it's currently implemented in about 9 states. And there was a draft regulation in June 2025, which said that now 2 helmets have to be given to the consumer while buying a motorcycle. Although it's a draft regulation, we don't know when the regulation is going to come into effect. But sooner or later, we think it's going to come into effect, and that's going to have a consequence on the industry as such. The industry is going to grow because you're giving 2 helmets in the same house.
Yeah.
So
why is it implemented only in 9 states, you said?
So it's I think the implementation is a state subject right now. So that's why recently Uttarakhand came into this thing as well. They implemented this rule as well. So now when you have 2 helmets being given with every motorcycle, so you're actually addressing the same house. That means you're addressing a pillion rider as well. So we expect the industry to grow as well.
No, absolutely. It's a huge tailwind for you as if more states implement a law and with every motorcycle it's not 1 but 2 helmets. That's a massive fillip, right? But Siddhartha, to go back to your exports point, because exports obviously are going to be very lucrative from a margin expansion perspective as well. Can you share some timelines with us? I mean, what is your export ramp-up timeline? Which markets are you looking at? You also, I think, entered into a tie-up with Decathlon, but I'm not sure if that's only for local sales or will you be supplying to them globally as well?
So for Decathlon, at the moment, the first production will roll out in the final quarter of this financial year, and that will be primarily for the domestic market. But eventually, the plan is to also export to various markets for Decathlon. And in terms of export strategy, I would say that there are a lot of large markets that we are addressing right now. So Colombia is one, Mexico is another one, Indonesia, Philippines, Spain. And as a part of the strategy, we would be opening a warehouse and a subsidiary in Spain this year, just to be so that the time to market is much faster. At the moment, if somebody places an order, it takes almost like 60 days door to door after the order is placed. So once you have your own warehouse, you're much faster to the market and you can gain market share as well.
Okay.
It's a lovely location for a warehouse, I must say. And obviously, it cuts down your time to market to Latin America.
Yeah.
So makes full sense.
All right. And Siddharth, I need to compliment you. Some of the new helmets that you've launched are quite good. That day I was, driving back from work. I stopped at Dadar and I looked at the collection. Next few days, I'll be picking up a new helmet after a few years. So all the best with regard to business. Your shareholders will track the numbers. I'm tracking the, the new variants that are coming out with as well. Wishing you a good day ahead and we catch up rather soon.
Thank you.
Well, let's focus on the markets then. The Nifty has scaled new highs, but the broader markets have been in pain. Nimesh puts out a very, very interesting piece on the pain that we've seen in broader markets. Nimesh, take it away.
Well, as you rightly said, while the Nifty is at Bank Nifty is at record highs, there is a bigger pain in the broader market. So that's been a struggle point as far as markets are concerned for this year. Just look at the data now. I've looked at so Nifty at all-time highs, broader markets in pain, and a lot of the stocks in the broader markets are down 50 to 70%. Now let's look at the individual, which represents the broader markets, the BSE mid-cap, micro-cap, and the small-cap indices. 50 to 70% of those constituent stocks are down or have given negative returns Y2D. So that's the kind of pain we've seen in the broader markets. The first will be the BSE mid-cap index. I've just identified some names which are down 50, 70%. This is a list. Ola Electric down 52, Brainbees is down 52, so is Vedant Fashion, Kalyan Jewellers and Oracle down almost 35, 37%. This is a small list of big mid-cap losers. The second list is much higher, the BSE small-cap index. Look at the kind of pain in the small-cap stocks. Sadhana Nitro is down 86%. Vishnu Prakash is down 72. Dreamfox is down 60. So is Pakka and MobiKwik, one of the recent listings, down 68%. The list is much higher there. Even the quality names like Praj Indices is down 60%. Tejas Networks down 60. So is Pravek, Protein, and Ganesha Eco. And all these names have got a decent institutional holding as well. And they are down Y2D 60, 70%. So that's the small-cap index. The third is the micro-cap. Even this list is quite long, but I've just identified 5 big losers. Jindal Worldwide is down 60, Ease My Trip, Orchid Pharma, KNR Construction, Route Mobile, all down 50, 60%. So that's the kind of pain in the micro-cap as well. Now I'm looking at the BSE Mid-Cap 100, which is the so-called large-cap liquid Nifty names, mid-cap names. Even there, the list is quite long. Swiggy is down 25, Supreme Industries, NTPC Green, Godrej Properties is down 25% Y2D, and so is IRB Infra. So that's the kind of list which is there in the mid-cap index as well. As I pointed out, while the Nifty and Bank Nifty is at all-time high, there is a much bigger pain in the broader markets, and a lot of the individual broader market stocks are down between 50 to 60%.
Oh, yes, absolutely. And that is why that, broader market enthusiasm is missing, Nimesh. I guess that's why it doesn't really feel like an all-time high. Perhaps things change. Perhaps if the Nifty itself decisively crosses 26,300, then everybody starts participating and the momentum really comes back. We'll see. Thank you very much for the details over there. Dharmesh Kant, head of research at Chola Securities, is joining in. Dharmesh, let's start right there with that point that Nimesh was just making, this lack of broader market participation. What's your sense? And for some of these mid-caps, which you just highlighted, which are well off their peak, Any picks, any bottom fishing that you'll do? I mean, names like Kalyan Jeweler, for instance, have done so well in the past. Generating great growth, 30% plus growth for quarters, many quarters. But obviously, the stock is off its peak levels.
Yeah, good morning, Survi. Thanks for having me for the show. I mean, if you track 50 to 60% have not performed or they are down from their peak level in the broader market, and same has been the case with the earnings. It's reflective of what the earnings has been. So we did an aggregate of top 500 market cap earnings analysis, and there 33% was a negative growth for Q2, and almost 50% was underperformance from the broader market, which performed well, around 20-21% kind of a growth rate was there. So, I mean, as far as the picks are concerned, I think chemicals is shaping up very well in the broader market space, specifically the specialty chemical space. There, Navin Fluorine or SRF, the specialty chemical division has done very well. Ether Industries is another case in point, PV industry. So this space is looking attractive. Followed by pharmaceutical space, where again there were a couple of good earnings reported by. I mean, Lupin is a case in point, followed by Jadis Life or. There were a couple of others as well. So, I mean, one has to be very, selective for the broader market space where the performance is there. They can continue to do so. But sectoral wise, I think auto ancillaries followed by, chemicals and pharmaceutical are looking pretty good at this point of time. A couple of names which I just mentioned.
Okay. All right. Hi, Dharmesh. Good morning. Good to see you, Ben. What else are you all tracking? There are plenty of stocks that are looking up, actually. What about the metals pack? You have the dollar index that softened. We just highlighted that, silver has moved to a fresh all-time high. It's a tricky one because you can only play it via Hindustan Zinc. And, and you have that impending demerger for Vedanta. So how are you all playing the metals pack? Because when base metal prices move up on the back of a weaker dollar, then it provides an opportunity, at least in the near term. Anything you like from metals?
Yeah, good morning, Nigel. I mean, metals are for brave-hearts. It has its own share of volatility playing out, and much has to do with international prices moving in tandem with the dollar index parity play. But I mean, demand-wise, as far as international market is concerned, the demand has not picked up in the metal space, though the prices have moved up quite significantly, particularly for the copper. So there are select metals where the prices have been moving up quite dramatically, and copper is the case in play, followed by silver. Both have industrial use, and that's the reason why you are seeing such a pickup. And renewable energy is one play which has been helping them. So as far as Indian metal scene is concerned, we have recently added Hindustan Zinc in our large cap high conviction portfolio. So but that I think merits a good chance, and the valuations are also very attractive compared to the others. So Vedanta, after this Jayaprakash Associate deal not playing out, I think this has been augured well for them. It's a blessing in disguise for them. And there the value is, deep value is there. So financial re-engineering or engineering the promoters play can still be an overhang on the stock, but going by 8% kind of a dividend yield with solid business in play, and the metals seem looking up in Indian segment. So Vedanta, Hindustan Zinc, Hindalco, and JSW Steel. So these are the four plays which we have been consistently recommending to our clients, and any declines there are likely to be bought into.
Dharmesh, Lenskart came out with numbers. Now, I mean, numerically, you really can't find fault. Things are looking good. Let's just put up the Lenskart numbers again. Revenues moved from 1,700 to almost 2,100. The margins expanded to 19.8%. So solid margin expansion, EBITDA expansion. And a couple of brokers last week, Dharmesh, also came out with buy calls, saying that 500 is possible on the stock. I think it was Jefferies. Your thoughts?
Yes, so I mean, they have no choice but to come out with such kind of an updates. So I will give you a perspective on how we are seeing Lenskart. Nothing wrong with the business. Business will continue to do well. But look at the numbers. I mean, FY24, the top line growth was 43%. FY25 it came down to 23%. And this quarter it is 21%. Our sense is for next 4-5 years, this 22% kind of top line growth will continue with margins somewhere around 19 to 22%. That would be the margin band. But the profitability, the best case scenario for FY26 can be 400 crores. And if you compound that at 25% CAGR for next 5 years, so FY30, the likely, PAT would be around 970 to 1,000 crores. And at 71,000 crore of market cap, it's still available at, 70 P multiple with a CAGR of PAT CAGR of 25%. So, I mean, that doesn't gel well. The question to be answered here is, will the stock price also compound at 25% CAGR for the next 5 years? To which I don't think so it will be a case. It can go to 500 or 550, couple of more quarters of good earnings, but then I think it will cool down. So if you are looking at 3, 4 or 5 years kind of a perspective, wealth creation from current investment in Lescart, we have our own doubts. So we have been, neutral to negative on this counter.
Okay. Got that. Dharmesh, coming back with more questions. Have to take a quick commercial break here. There's about 12 minutes to go for the pre-open session. Sudarshan is going to be with us, and so is Mitesh. Stay tuned. Welcome back. There's 10 minutes to go for the pre-open session to kick off, and lots to discuss this morning. 100 points higher is the indicative open as far as the GIFT Nifty is concerned. Hormuz is here. Just to rewind the clock back and look at the big movers from Friday, and can we look at carrying over some stuff into today? Volumes and what's behind the price action. Hormuz, over to you.
Morning, Prashant. And auto ancillaries have been on the radar over the last couple of months now, and Rico Auto is one such name. In Friday's session as well, it was the third straight day of gains for the stock. The stock had double-digit advance as well, 13.5% higher on Friday. The volumes were the highest in the last 4 months, and it was the 8th instance in 2025 when more than 1 crore shares were traded on the stock. 7.5 crore shares traded on Rico Auto on Friday, the 20-day average being around 46 lakhs, and out of those 7.5 crore shares, only 60 lakh shares were marked for delivery. Here too, the 20-day average here is only 8 lakh shares, and the Friday's turnover 883 crore, and that is higher than the company's free float market cap, which is around 790 crore. Eureka Forbes also had its biggest single day gain since August of last year. It was the 4th straight day of gains for the stock, and during this 4-day gaining streak, the volumes have been on an increase every single day. And Friday was no different, that 47.5 lakh shares traded on Friday, the 20-day average being around only 3.2 lakh shares, and out of those 47.5 lakh shares, 14.5 lakh shares marked for delivery, the 20-day average only 1.5 lakh, so significant delivery-based buying seen in Eureka Forbes as well. Reflex Industries was an order win. The stock cooled off from the highs of the day, still ended around 8% higher, but the volumes on Friday were the highest on record, with close to 3 crore shares being traded on the stock. The 20-day average is only 3 lakh, and here too, out of the 3 crore shares, only 18 lakh shares were marked for delivery. The 20-day average just over 1 lakh, and Friday's turnover was around 50% of its free float market cap. And lastly, EPAC Durables, the stock fell to a 52-week low on Friday and then staged a rebound, ended over 8% higher, the biggest single day gain in 4 months, close to 40 lakh shares traded, 8 lakh shares marked for delivery, but the stock still is down over 60% from its 52-week highs.
All right, Harmaz, thanks a lot for that interesting list as always. Dharmesh Kant is still with us. Dharmesh, today we'll get the auto sales numbers that will start trickling in. What's the call out there? If I remember correctly, you were fairly bullish on Mahindra & Mahindra. I think that call has worked out quite well. And you could correct me, but Hero MotoCorp as well is something that you'd liked. You could correct me on what it was, and what are you bullish from here on?
Yeah, thanks, Nigel, for remembering that. So Hero MotoCorp and M&M we have been riding since the month of May, but as of now, for last 1 month in the month of October, we have not recommended any fresh buy on both of them. Though I mean these are the two stocks which have done fairly well and has gone up above the September last week highs post the GST implementation came through, and Eicher Motors is the third company which was able to do that. Others have been languishing at the top end of the band. Our sense is, see, the numbers we have to see today how it pans out, but anything above 15% kind of auto sales number growth for the month of November would be pretty fine with all of these companies, be it two-wheelers or four-wheelers. But anything below that, I mean 10%, 12% kind of a number, if it comes through, then definitely there will be a serious profit taking happening into the space. We are structurally bullish on this space, just waiting for some sort of a correction to come by to buy these counters or recommend fresh buying to our clients. But it has to be seen. If you are holding it, continue holding it. And if you are looking for, say, a year or so kind of a perspective, then M&M and Hero MotoCorp continues to be the top bet in the sector space out there.
Okay, all right. Thanks a lot, Dharmesh, for joining in and filling us in with your calls on a whole host of stocks. Have a good day ahead, and we catch up in the coming days. Well, time to slip into a short break. You come back, pre-open rates will be with us. We'll also be joined by Deloitte India's MS Money to discuss about the likely new cess bill on sin goods. And we'll connect with our technical experts. Sudarshan and Mitesh are waiting for us as well. Couple of minutes and we'll get the pre-open rates that'll be coming in. But for the time being, let's welcome our technical experts, Sudarshan Sukhani of Technical Trends and Mitesh Thakur of Bonanza Portfolio, who join us on the show. Good morning, gentlemen, and good to see you all in. December is already here, Decembering, so to call it. Christmas is around the corner. But will it be a good one for the bulls? Mitesh, you go first. Last couple of days, we've seen some sort of consolidation. How would you trade the Nifty from here on?
Yeah. So, Nigel, I think, we've been actually calling for a consolidation over the last few days, very clearly, believing that the market will require some effort before it gets past the all-time highs. Today, we'll get a gap up, which should take us again back to this 26,300 mark. And I maintain that once we get a closing about that, we'll get some kind of confirmation of a breakout, and then we can look at possibly 26,850, 900 zones as the minimum target on the upside. So I think today, in that sense, we'll be watching the action closely. But looking at the fact that we are getting past the earlier highs with a gap should be a positive sign. So we'll be inclined to trade very clearly with a long bias. On the index, I think we'll decide once the market opens. But on the stock side, it's clearly an all-long list.
Okay, so prefer to trade with a long bias. Got that, Mitesh. Morning to you, morning to Sudarshan as well. Sudarshan, what about you? What's the approach for the index?
Yeah, good morning. Well, the approach is the same. For the last 10 days, I've been saying we are in an uptrend. Let's go and buy and hold long positions. We had two sharp corrections, dips, not corrections. And I had said we have to suffer through them because the levels are not being broken. So the trend is intact. So those who have long positions should continue to hold them. Just move your stops to 26,100. The problem comes with people who do not have any positions. For them, the minor correction or a minor consolidation intraday is still a buying opportunity. There's more to this up move than today's gap up, but they have to be positional traders, not intraday traders. If you take a position and take a view on the trend, go long and stay with it. Your stops are already available, 26,100.
Okay, all right, got that. Those are sales numbers coming in bang in line with estimation for Bajaj Auto, that is almost 4.5 lakh units. They did 4.2 lakh units same period last year. So there's some improvement there. Okay, so total sales at 4.5, and we'll put up the individual two-wheeler numbers as well. They'll be flashing on your screens. Gentlemen, let's quickly get to stocks. Sudarshan, what's on your list today?
Well, because we are either long in the Nifty or I'm suggesting go long still. So it's a mid-cap list, all buy. Granules is a buy with a stop under 550. Vedant is continuing buy with a stop under 520. Laurus Lab is a buying opportunity. It had a good day. I also have a disclosure. I have some trading positions in it. It's a buy with a stop under 1010. And Phoenix Limited, which has been going through a very strong rally, has now come in my list finally with a stop under 1705. Stay long in the Nifty, stay long in the Bank Nifty, focus on mid caps.
Okay, got that. Stay long and focus on mid caps. Mitesh, what about you? What's the stock list for the day looking like?
Again, on long list, as I said, good morning, Subi. On the first name is Dr. Reddy's. Keep a stop below 1239. Look for a target of around 1300. M&M, I think, has been consolidating at all-time highs. So a breakout would happen today with a gap. So buy here with a stop at 37.29 for targets of 38.20. HUL showing signs of revival. So that's a buy as well. Keep a stop at 24.49. Look for targets of 2,500. And also a buy on KPIT Tech with a stop below 1,200 for targets of 1,270.
Just a word, Mitesh, since you brought up auto stocks, Sudarshan was telling us, and the auto sales numbers have started flowing in. He was telling us that on the CV side, the market is expecting a good performance. And we saw last week, in the middle, there was a bit of a flutter on stocks like Ashok Leyland. Any trades there?
So, in fact, I've had some long positions personally on Ashok Leyland, and given the SEBI regulations, you will not comment on stocks which have traded in the last 30 days. So I think I'll avoid it. But yeah, given the fact that we had some positive long sell positions, clearly means that the bias is on the positive side.
Okay. All right, got that, gentlemen. Thanks very much. We'll come back to you closer to market open. Now, let's address all the important ongoings in the national capital. The winter session of Parliament begins today. A total of 13 bills are listed to be taken up in this session. This includes the Insurance Laws Amendment Bill, the Jan Vishwas Amendment Bill, Insolvency and Bankruptcy Code Amendment Bill, the Atomic Energy Bill, the Corporate Laws Amendment Bill, to just name a few. But the one interesting one to watch out for is the Central Excise Amendment Bill and the Health Security, National Security Cess Bill. Now, these are two which are likely to replace the GST compensation cess with a higher excise duty on tobacco products. And then, of course, there's a new security cess on pan masala as well. These bills signal a major shift in the way taxes are levied. And that's why we've got Mr. Mani joining in from Deloitte to give us his first thoughts. Mr. Mani, thanks very much for joining in. This was always the discussion. The compensation cess is going. Now what? What happens? How will the states be compensated if there is any revenue loss, etc.? So first, what we understand, what Timsy has been telling us, that on tobacco particularly, at the end user level, this is going to be net neutral. It doesn't increase the incidence of tax. But the manner in which the taxes are going to be levied, what would your first take be? And how should we understand this?
Okay, so I think the biggest aspect is that the suspense that was surrounding the taxation of tobacco products post September 22nd, that suspense is gone now. So we know what's going to replace. You are absolutely right in saying that the incidence on the end consumer is presumably going to be the same, maybe some marginal changes here and there, but it's largely going to be the same. The key aspect that I observed in what is proposed now at a broad level is the fact that while a health cess was always on expected lines, we also now have it called a health security cess. Now, this can possibly be linked to the fact that a couple of days back, the Defense Ministry requested for an allocation of 20% more for defense purposes in the budget. And therefore, since the cesses once collected for a particular purpose can be used only for that particular purpose, there is now a feeling that the amount that will be collected through this cess over the next few years will be high enough to take care of the health expenses arising from tobacco usage and also the additional security budgets that will be required. So that is one key aspect that I picked up when I looked at this. The other aspect is in respect of the central excise levies also, because bear in mind, GST is levied on tobacco products. There's also a central excise levy on tobacco products. And now there's going to be a health, national security cess also on tobacco products. So for tobacco product manufacturers and pan masala gutka manufacturers, the level of taxation and the number of taxes they are going to pay is going to continue to be humongous. That's not going to get, simplified. Since this is going to be levied on the basis of the production capacity and not on the sale, which is the norm with respect to all other products which are subjected to GST, it is going to be very interesting to see how they are going to enforce this. Because bear in mind, similar measures have been taken in the past, even pre-GST, on certain products of steel, etc., where they felt that there could be more of likelihood of evasion. So when something gets levied on the production capacity, typically the manufacturer has no option but to pay the tax, in this case the cess, on the estimated production capacity and not necessarily on how many goods leave his factory at that point of time.
Mr. Mani, if I can just come in, so say ITC, just as an example, right, say operates at a 80-85% capacity utilization. So what will companies do? Will they bring down their rated capacity? What is to kind of, companies will look to reduce the tax incidence, otherwise the tax incidence goes up.
Yeah, I don't think companies will be given a choice to reduce the production capacity, but or the rated capacity, for any purposes, because to a very large extent, the capacity will be as certified by the manufacturer of the equipment and not necessarily only by the user of that particular equipment. So if there is an issue on account of which they need to run it at 80% capacity, they need to take the GST officials and the GST commissioner into confidence, explain to them the reasons, and then maybe the production capacity based levy will be levied on that revised amount. The onus is on the manufacturer to demonstrate that. It is not on the GST authorities to do that.
Okay.
So the GST authorities will levy the cess assuming that the entire capacity is being utilized. So if ITC has capacity to produce 100 cigarettes a day, irrespective of how many it is producing, the cess is going to be on 100.
Absolutely. So it is a presumptive levy in that sense. And if the presumptive levy is based on an aspect which is not possible, could be due to a commercial reason, could be due to a technical reason to do with the machinery, the onus is on the organization to approach the GST commissioner and get it down-rated.
Got it. Sorry, Surbhi, I know you have one more question. Why don't we finish this? I want to talk about the other one, which is the tax collections. Go on, but.
Yeah, so just a last point on this. So while for the end user, this is largely, the tax incidence neutral, for the sin goods manufacturers, does it complicate things in terms of, asking for any credits? I mean, it just sounds very complex, Mr. Money. So we're just trying to understand from the corporate perspective, does it open up a whole new Pandora's box?
Okay, so whether these products can be called sin goods any longer or not, I don't know. But tobacco products and pan masala, and because the people who are consumers of these don't consider them to be sin goods in any case. And that's why there is a huge demand for them and there is a taxation on them. But to your point, in terms of does this complicate things? No, it doesn't complicate things any further, but it does not simplify things either. Because the expectation that many people had post 22nd September, where the GST level taxation on many products was simplified, was that some simplification can be attempted here also. Okay. The amount of tax collected can be the same, but possibly it need not be collected under so many separate heads with so many separate compliances.
Sure.
To that extent, the complication continues.
Got it. So the complications continue. And my last question, which kind of feeds into what Prashant is coming to, which is overall tax buoyancy and collections. This cess, which is the health, say, national security cess, this will be entirely in the centre's kitty. I mean, with the compensation cess, the usage of that cess was very clear, the distribution to states. What happens now? And that feeds into what, Prashant, maybe you want to take it further on overall tax collections. How much tax are you collecting and how are you going to share it with the states?
Yeah. Mr. Mani, let me just supplement that point. So 4.5, April to October, Centre's total tax collection has grown 4.5%. The budgeted number is close to 11%. So there seems to be a shortfall. So my pointed question here is, they'll have to make it up, right? Either capex spends moderate, maybe excise on fuel, I don't know, I'm just thinking aloud. Given the government stance that they will not let the fisc slip, right? So something else has to happen. What will that be?
Absolutely. So when we are talking of the cess, we have to bear two things in mind. The fact that they're doing this in December, to me, indicates that the amount that they were required to collect to compensate for the borrowings during the pandemic have been completed. And therefore, technically, even if they continue collecting the compensation cess on tobacco products as it is, they will not be used it for the intended purpose for which the cess was levied. And on that, as you are aware, in the past, we have had the Supreme Court saying that when you levy a cess for a particular purpose, it can be used only for that purpose. It can't be deployed for any other purpose. So compensation aspect is over. And now they are coming up with a cess which is going to take care of two things, health and security. Now, to your point of, is this going to help in managing the fiscal deficit? We'll have to wait and watch when this is introduced in Parliament. And in terms of the explanation that the FM gives when this particular bill is introduced.
Can you answer the other question, which is, irrespective of this cess, this 4.5, the gap is large in terms of collections. What do you think the government will do?
I think that we still have 4 months and there is a lot of buoyancy that has come in because of the GST rates being lowered. So the GST collection data that will come out later in the day today is going to give us a very key indicator of how the collections are going to stack up. Because as you are aware, GST collections have been very, very buoyant in the last 8 months or so.
What is the growth, April to, do you have the number? GST collection, April to October or April to September, right?
I don't have the data in front of me right now, but on a monthly basis.
Okay. You're saying that, because
it's
GST
been going up month on month.
Sure. Be a GST, but I think it's low single digits if you look at like-to-like, the growth. Same period last year. I mean, this
9% roughly is what I recollect. 9% roughly year on year.
9% growth. And Mr. Money, I mean, since you brought that one, that's really important. We need to see, because the government's argument was that any loss in tax will be made up by just the buoyancy, by higher consumption of goods and services, right? So, and if I remember correctly, when the cuts were announced, the notional loss was supposed to be somewhere close to maybe, I think, 1 lakh crore. If you could just revise the numbers and what your estimates would be. This will be the first full month that we get the GST data post the GST cut. So any expectations in terms of how much we should expect?
What we have been seeing in the marketplace is that there has been truly a consumption boom across products. And when I'm saying across products, many of the products which bring in the largest kitty in terms of GST. So automobile sales, for example, where there is a large amount of GST collected, have been very, very buoyant. So to my mind, we should just wait till, maybe 4 p.m. today when the GST collection data is expected and see how it has performed for the first full month. And that will give us an indicator in terms of how it is panning out.
Yeah.
Just bear in mind, just one more aspect, that the concept of a festive season or a festive sale is now coming down a bit. So the dependence on the festive period for collections is coming down a bit because consumption is more evenly spread throughout the year.
Okay. All right. Got that, Mr. Money. Thanks very much. So two important things we need to watch. One is what is the GST number as it comes out today? And two, when this bill is introduced with this new cess, National Health and Security, this is no longer a compensation cess. So the money doesn't necessarily have to go to the states. So will it be added to the centre's kitty? We'll watch out for this as well in the fine print. Thank you so much, sir, for joining us today. Very quickly, going back to our technical experts for final trading calls. Sudarshan, which stock?
Granules, buy granules with a stop under 550.
Okay, and Mitesh, for you?
M&M could be an interesting pick for the day. I think I'll go with long on that.
Okay, all right. Gentlemen, we'll watch those names. Markets, of course, opening at record highs as the pre-open is indicating. I think we can go across to Nimesh now. Naveen Fluorine is on his radar. Nimesh, tell us why.
That's right, Prashant. So, interesting report from UBS. They have a buy rating, but they've sharply raised the target price on Naveen Fluorine to 7,000. Now, UBS believes that while first half was quite strong for Naveen Fluorine and they've done well in terms of growth and margins, that momentum is likely to continue going forward as well for two reasons. First, improved CDMO visibilities. So, the first phase of GMP4 is operational and they expect repeat orders for the high growth products as well. So that's the first reason. The second being higher performance in the HPP as well as the specialty chemical growth. Now, the balance sheet is quite strong after the QIP fundraising that the company has done. So that means that the capex-driven growth is likely to continue. Despite the 75% stock price rally, UBS believes that the street is not fully pricing in the big growth in the CDMO facility and the CDMO growth. So that's the reason why, while they have a buy rating, they've sharply raised the target price now to 7,011 Fluorine.
All right, we'll get the rates coming up 1% higher in the pre-open. Just a couple of seconds to go for the market open, and we'll take it from there. First rates in just a bit. We'll look at, of course, the Nifty Bank, mid and small cap indices, and then we'll look at the broader market as well. So, yeah, I mean, it's a new all-time high, I guess. Yeah, it is. 26, is it? 26,288. So I don't think it is a new all-time high, at least on the Nifty. But I think we hit 300 and something, right, on the Nifty. We're at about 26,289 at this point in time.
So the high that we hit is 26,325. So indeed, at the open, for what it's worth, we did make a fresh high. So the latest all-time high, 26,325. Okay, so we need to then sustain there, go above it, and not slip.
So the open was at a new all-time high, absolutely. So yeah, I mean, and the Nifty Bank, of course, as well, 59.9, I think almost at 60,000 levels, right? 59,973 or so. The small cap index is not at a new high, or is it? And the mid cap index is up on your screen as well, about 0.25% higher. The small cap index was a little behind, but we'll see. The broader market, 1,400 up and about 500 lower. That's the advanced decline ratio, about a little over 2:1 in favor of advances. Nifty heat map will give you a quick sense of where we are starting. We'll pick it up from there. What do we have? Bulk of it should be in the green. It is. JSW Steel, Shriram Finance, Tata Motors Passenger Vehicle Business are on one end, ITC is on the other end. Maybe we should just start with the ITC stock. And in the pre-open, it was, I think, lower, but not by much at all.
It's down 1.5% now.
Yeah, 1.5% lower at this point. But let's get to individual names now. Surabhi.
So on ITC itself, I guess, as Mr. Money just explained, that it doesn't change the final incidence of tax, but any expectation of a reduction or a simplification in the manner in which that tax is levied, that is taken away. And we need to watch out for the actual operational details of how this will be levied, because it is on manufacturing capacity, not necessarily how much you manufacture out of that capacity. So ITC is lower, but the rest of the market is positive. So let's look at the winners. And JSW Steel, about 1.5% higher, BEL 1.2%. There is Tata Motors, which is up and about. Even Bajaj Auto came out with a very steady set of numbers, about 8-9% growth year on year on total sales. Stocks up about 0.7%. State Bank of India is contributing. Lever is contributing. 0.5% up. L&T is up. Reliance is up. So all the big batters, they are pitching in quite nicely. Kotak Mahindra Bank, Axis Bank, some of the banks also doing well. The Bank Nifty itself is up about 0.4%. On the downside, really, there's not much to worry. It's only ITC. And that's about it. Some tail enders like Tata Consumer, but those stocks are not even down 0.5%, so not really worth counting. Looking good, the Nifty steady, just under the 26,300 mark, Nigel.
Well, you know, on Friday morning, I had said one thing, that silver is making fresh all-time highs, if you recollect, you know, at around when markets opened itself. So there's only one play, it's Hindustan Zinc. And the thing is that silver is very, very volatile, but you have a couple of central bank meetings, and the optimism is that we'll get a rate cut both in India as well as by the Fed. And the Fed one is the one that will, you know, trigger base metal prices to move up as well as precious metals. Explains why Hindustan Zinc is up, and all the ETFs as well, Tata ETF, all the other ETFs as well, they have moved up. So that's one of the big movers. Hindustan Copper has seen more than a 10% correction from the recent peak, but copper prices have moved up. You'll argue about valuations, but the stock is up 1.5%. Sterling and Wilson, that's a big order win that they have out there, and that's why that stock is up and about. Likewise, NCC, big order win out there as well. So that's why that stock is moving with very, very good momentum in today's trading session. Tilak Nagar Industries, they have gone ahead and they've closed that long-awaited transaction with Imperial Blue. That hit the exchanges just a few minutes or so ago. And that's why that stock, in fact, is up close to around 2%, because now it moves them from a brandy to a whiskey player as well and gives them pan-India presence. Announced some time ago, the street was waiting for this to close out, and that's precisely what's happened. So net-net, a good start to trade. You have a lot of stocks that are moving up. The Nifty up 90 points. Breadth of the market in favor of number of stocks advancing. And the Nifty Bank, it's on its way to 60,000 odd. What a move out there on the Nifty Bank, moving from strength to strength. And the metal index, that's the one as well that we highlighted earlier today. And that's the one that's, you know, putting on some weight, up 0.7%.
Well, 90 points, right? So not this is a good-looking screen overall. Market breadth is about 3:1 in favor of advances. 26,290 is where we are at. I mean, it'll be good to see these gains hold out for the rest of the session, but the start is certainly good. Silver Bs, right? So 5% higher, and it's actually Silver Bs are the number one volume traded. Ticker on my screen right now, across on the NSE. Hindustan Zinc is number 2. So 5 on Silver Bs, 2.5 on Hindustan Zinc. M&M Finance is up about 3%. AG's, which is the newly listed business, the demerged entity, 5.5% higher on that one, 275. Tejas Networks, completely bombed out name, but is slowly starting to come back from the lows, right? So 470 odd was the low. Stocks at about 520 now. Sterling Solar Wilson about 4.5. I think there was an order on Friday or Thursday. 4%. Okay, I think there's an order today as well. So 4%. JM Financial is up about 4.5%. Natco Pharma is up 3.5%. K Fintech, I think we mentioned, and all of these silver ETFs are coming up. And Tata has one. HDFC has one. So they're all up 4%, 5%, and of course the underlying silver rally that we're seeing. Poonawalla FinCorp is up as well at this point in time. Welspun Living had this massive move on Friday. Moved up from 130 to 150 on that Friday. It's coming back a little bit, 4.5. It's got volumes on it on the downside. 4.5% give back. Stocks back at about 142. Capillary is a recent listed name, 2.5% lower on Capillary. 63 moons went up like a rocket to the moon. So, that NCLT case, the issues at NCLT, I guess, have been resolved, and so from 700 it went up straight to about 940 in about 3 sessions. It's coming back. It's giving back some 2.5% lower. Whirlpool, of course, that block being sold, it's at a new low now, 1,038 on Whirlpool. Again, this one has got volumes in it. ITC, Godfrey Phillips, both are down about 1.5%. Excel Soft, which is the recent listing, I think listing of Friday or Thursday was it? It's down almost 5% right now. Some of these names like Kiri Industries, again, right? Kiri had a big move last week, and it's giving back about 5.5%. I can mention more names, but volumes are a little thin at this stage. Dheeraj Agarwal is with us, Managing Director, Ambit Investment Managers. Dheeraj, great to have you with us here on the program. Thanks very much. Are you in the camp which believes that, and mostly people are, especially on the sell side, that things are looking a lot more constructive as we look into 2026, and there's money to be made here?
I think things are looking constructive, yes. I am a little bit of the same camp at this point of time. Although I will add a little bit of caution there. I'm cautiously constructive. I don't see a huge up move. It will still be a stock picker's market. At the index level, we will see the markets grind up rather than explode up. So that's where I may differ a little bit from the rest of the market. But yeah, that's where I am.
Now, Dheeraj, I must actually compliment you because that caution was ahead of the curve. It was sort of well taken because you've been maintaining a cautious stance on the market for several months, for the better part of this year, if I remember correctly, talking about, concerns like earnings, and valuations. So, yeah, kudos, that call has played out. But now that you are turning, from totally cautious to cautiously optimistic, tell us what's shifting. And let's start with the earnings trajectory itself. Having heard a lot of the corporate commentary at the end of Q2, I mean, at the macro level, look at those GDP numbers. They look fantastic, right? But we need to get sustained double-digit earnings growth. Do you see that happening this year onwards?
So let me start with the controversial topic, which is the GDP number, right? I mean, the real GDP growth reported this quarter or September quarter is 8.3%. But the nominal GDP growth for September quarter is actually slightly lower than the June quarter at about 8.5, right? The corporate earnings and corporate sales growth actually track nominal more than real. And there is a little bit of a hot debate going on at this point of time that some portion of our GDP under the new methodology is calculated as nominal and deflated by the deflator to arrive at the real. So maybe the low deflator is artificially inflating the real number at this point. So let's just focus on the corporate earnings growth. For September quarter, Nifty earnings growth is just 6 or 7%. BSE 500, X of OMCs is only 7% to 8% range, which is all very weak. So the reason for being cautiously constructive is the two big triggers that we have seen recently. One is the large GST cut. Second is the continuous decline in interest rates. Both these put together hopefully result in sustained consumption revival in the second half, and hopefully results in better earnings trajectory in the second half. The jury is still out. Some of our channel checks are indicating that in few pockets, demand has already started weakening post-Diwali, which is not a very good sign. But there are reasons to be cautiously optimistic.
All right. Hi, Dheeraj. Good morning and good to see you. Ben, let's leave eternal to the side. Let's focus on the next one that I want to focus on, right? Let's look at it with the lens. I recall when the Lenskart IPO came out, you were a little bit more positively biased on it. And to be fair, the stock sold off 10% on listing day. And after that, there's been a lot of interest. We know there's a big market out there. Valuation debate continues, but otherwise the business appears to be shaping up well. What's your view on the name from here on? It's held up actually, though we have a fair bit of the float that's limited, at least as of now. Your view on this name?
So honestly, I don't have a very concrete view on Lenskart at this point, but if I take the discussion a level higher in the current environment, markets have become valuation sensitive as compared to valuation agnostic for even high growth companies a little while ago. And you started this discussion by quoting internal. You can see that pressure on internal stock price also. in the last 1 or 2 months. And it's across the board. Many of the high growth companies where valuations were extraordinarily high are not able to move up anymore. And the primary reason for that is, when I spoke about earnings slowdown. So while there is earnings slowdown, there is no earnings crisis. This is a very important distinction to be made. Last time we saw earnings slowdown between 18 to 20, there was an earnings crisis as well. And hence, the few pockets where earnings growth was strong, valuations kept on rising. This time, the same thing will not happen. And that's why we need to be cautious on valuations too.
Yeah. Dheeraj, allow me a minute on this. And I just want to tell viewers as well. I think, this was 7th November. Ambit did come out with a sell call. And the 12-month price target on Lenskart now that Ambit has is 337, which is probably one of the most bearish targets on Lenskart. Remember, on the other end of the extreme, you have someone like Jefferies. Jefferies is calling for 500 on Lenskart. So, Dheeraj, this is not a stock call discussion at all, but I think this also highlights the kind of market we are in, which is why as investors, it's really important to understand what's going on. Lenskart reported numbers are fine. There's margin expansion, around 19% margin. EBITDA has gone up. Revenue's also gone up, a fair bit. But the market clearly, between, your very cautious view now, Ambit's cautious view, and someone else who's calling 500, it's very, very polarized. Yeah. So how should investors navigate a situation like this, where technically earnings are fine, there's nothing wrong, there's no corporate governance issue in the company, but you just don't know how to understand the valuation debate? And Lenskart is not the only one, right? We have a whole pipeline of new listings that's coming up ahead, from NSE to Meesho to whatnot. So this is important for viewers and investors to understand. Just help us through this.
Yeah, so we tend to be a little bit more purists when it comes to valuations. Sometimes it works, sometimes it doesn't. So let's say during the 18 to 20 period, when a number of consumer companies were just continuously going up despite valuations, our analyst calls, at least on the stock price, appeared to be going wrong, because we took a purist view on valuations, and many of the stocks we had sell calls on. In the current environment, looks like the market has become a little bit more valuation sensitive, and exactly for the reason which I described, that you are able to find reasonably growing companies at much better valuations today in the market, and hence investors are not willing to pay exorbitant valuations for a similar growth or slightly higher growth.
So the Lenskart downgrade was a pure valuation call.
It is. It's a pure valuation call. And in fact, that's what makes the market. At all points of time, you need a buyer and a seller in the market and simultaneously. Otherwise, stocks would just go up circuits or down circuits all the time, right?
No, absolutely take that point. Okay, so let's talk about what you are liking. I mean, you've liked financials in the past, but give us some more color. With the index at all-time highs, where should we train our lens, buying lens, that is, in terms of new ideas?
So it's a continuation of the thought which I just expressed. Across sectors, it's possible at this point of time to identify companies where the growth rates and the fundamental metrics look either similar or better. And then you focus on valuations, which is relatively cheaper. So we are back in that kind of an investing time zone. So you mentioned BFSI. Take BFSI as an example. So all large banks at this point of time, the credit growth is similar, 10-11%. Earnings growth is similar, 10-11%. ROEs are similar, around 16%. And hence, one is better off choosing a stock which is relatively cheaper. And which is exactly why names like SBI, Canara, some of the second-line banks like Federal, CUBK have been performing significantly better than the frontliners like ICICI, Kotak and HDFC, because it's similar growth or better growth with slightly better valuations, right? So we're seeing that happen in IT. LTI with a better growth than TCS, Infosys, etc. has done better, and so on and so forth. So it's one has to slice and dice growth, some of the other fundamental metrics, obviously like ROC, free cash flow generation, and then compare the valuations. You can't just buy the best and the largest, unlike in 18 to 20 cycle, and hope to outperform.
Okay, all right, got that. Dheeraj, we'll leave it on that note for this morning. Thank you so much for joining in. Good to get the perspective on the market with you today. That's a view from Ambit coming in, and they're turning cautiously constructive on the market for this time. Let's just take a look at the screen before we move on to our next guest. It's still very steady, 88 to 90 points higher and just under 26,300. That's the story on the Nifty. It's been a good opening, you'd have to say. And lots of stocks are, of course, moving around on news or otherwise. Well, as promised, let's get to our next conversation then. And we have with us in the studios Mr. Sudeep Roy, Managing Director and CEO at L&T Finance. And we have three main points that we want to focus on with the company today. AI has become a big talking point for L&T Finance, and they alluded to this in some of their conversations with investors earlier, caused a bit of a flutter on the stock as well. So we'll understand more about this. And then, of course, we want to understand the usual metrics, the ROA, NIMs, all of the usual metrics in the outlook for H2, and an update on what's happening with asset quality as well. So let me straight away get to point number one with our guest. Sir, thank you so much for joining in. It's great to have you with us, Mr. Roy. Let's start with the AI, because what you, I think, mentioned to the street earlier was that now you're adopting AI in a manner that it improves your collections and your yields. I think that was really noticed. What exactly is happening? Is it beginning to make a meaningful difference? And then if you could give us some numbers, I mean, typically from wherever yields and collections are right now, how do you see those numbers improving? Over what period?
Thank you, Survi, and thank you for the opportunity. Obviously, we have been one of those institutions who have started to adopt what I call AI at scale. And if you look at our sort of 4 areas where we are piloting multiple solutions, first is obviously onboarding, underwriting, servicing, and last but not the least, collections. Now, the place where we started to deploy it very, very early was underwriting. And we look at AI at a 3-step process. Most people think when you talk about AI, think about Gen AI. But we look at machine learning, deep learning, and Gen AI obviously at the pinnacle of it. Most of our underwriting engine, for example, which is almost now 20 months into running and version 3, is deep learning based. And we deployed it for the first time in our two-wheeler business. We started with maybe about 14 models running. Now we have close to about 18 to 19 models running on that. And the fact is that if you look at the impact of that, and as you know, in the industry, two-wheeler industry, through the door bounce on underwriting, especially when portfolio bounce is anywhere between 23 to 24%. In exactly 20 months of running, and full-fledged implementation happened in January of this year, so I can say 9 months, our portfolio bounce is down to about below 15%. And our through the door bounce is now coming about 7 to 8%, which is almost equivalent to a prime personal loans bounce. What it does, and we actually also validated it through CIBIL. If our portfolio risk on our non-AI model underwritten portfolio was, say, at 90 plus at 12-month on books was 4.5%, my current portfolio, which is underwritten through Cyclops, which is our deep learning-based underwriting model, is currently running at about 3.2 to 3.3. So almost 150 basis points has got shaved off. Right, so obviously it will take some time to show in the full book because I still have a back book which is there. But as we progress forward, the portfolio will clear. And we have implemented now in two-wheeler, SME, tractor loans.
This is at the underwriting level.
Yes, December,
So also the question of cost has to come in, right?
Yeah.
I mean, to what extent has your software cost or technology cost gone up? And there's a cost-benefit analysis.
Yeah, absolutely.
And what should your investors watch out for over the next 12 months as you apply this to the rest of the portfolio and to other areas like collections, like,
So very good question. We spent overall 80 crores to build this underwriting tool. And on our automated portfolio management tool, we have spent about 25 crores to do that, right? And obviously, as this builds across all lines of products, the cost will. But we amortize this cost because these are literally software products, right? So we amortize this cost over a period of time. And what is not normally visible is that you have a credit cost. But the cost of credit administration on top of the credit cost is almost equivalent to that of the credit cost.
Basically, to recover 100 rupees, you need to spend...
You need to spend 50, 60.
So that goes down
actually 160 rupees.
Yeah.
So, for example, I'll give you the example of the two-wheeler business where we have the maximum experience. If your credit cost was, say, pre-Cyclops was 3.5%, your cost of credit administration was 2.5%. You total it up, it comes to about between 5 to 6%. Now, directionally, your credit cost can go down to close to 2%, your cost of credit administration becomes about 1.5%. So you actually save 200 basis points on that. Though you front load the cost in building the tool, you tend to
the tail is long
recover.
in that sense. In terms of
Plus also in AI in collections, an average physical call and human call, right? Okay, call conversion rates in human call, etc., are roughly about 67 to 68%. But average human call fully loaded cost can vary between 600 to 900 rupees, depending upon the length of the call. An average AI call for us is 38 rupees in terms of collection cost. And okay, success rates are lower.
The conversion rate?
55% success rate, 55% success rate.
But even adjusted for that, I think it's
you are adjusted for that. And the fact is that some of the new sort of models which are coming, right, you actually cannot make out the difference. In fact, the AI tool interrupts you in between, and that's almost human-like.
We'll come back to AI. Just Mr. Roy, thanks for dropping by, first of all. And I must say, in a market which has been tough, Surabhi, the L&T Finance stock has doubled this year in 2025. And
so,
you're completing 2 years, Mr. Roy?
A little more than 2 years.
A little more than 2 years.
More than 2 years.
So, okay, let's just... I want to start with microfinance. I'm sorry, I'm diving straight into some segments here. It's about 25% of your book?
Almost, 25-26% of our book.
Okay. Now, this was highlighted to us by an investor that while... And we spoke about this at the NBFC event, that things are turning. I mean, we are at perhaps the cusp of an upcycle in the microfinance space. Is that panning out? I just wanted to get a status check, because some of the data indicates otherwise, that things are still deteriorating. I mean, it's not moving up. The pace of change is actually deterioration, not improvement. So just wanted your sense.
See, I am in the business and I look at the numbers daily, right? And I'm sort of biased by the numbers that I see for my
that's what we want. I mean, what your numbers
my
are.
organization. So at least L&T Finance, we are doing pretty well, right? In this, the fact is that our disbursements have been growing with every passing month. So in fact, we just finished a month yesterday. And the fact is that we have been above 2,000 crores of disbursements steady state for the last 3 to 4 months, right? Collection efficiency for us has been improving secularly month on month. And when I say secularly in a month on month, about 6 to 8 basis points upward stick every month, right? So, last month when we ended last month, we were at about 99.57.
This is all microfinance?
All microfinance.
Okay, please.
99.57 pan-India. Now, this month we are a little higher, right? So, and Karnataka, for example, which actually was sluggish for a long period of time, actually broke through about close to 99.4% this month, right? So, which is not exactly near normal. For us, near normal will be between 99.65 to 99.7. We're still 10 basis points as my organization away from normal, which is about 99.7. See, the industry, again, has been improving. And I've been talking about in the industry, so the industry has been improving. But the pace of improvement is not that fast to the extent that we would have liked. Plus, also the industry has a liquidity issue, right? So the fact is that there is a lending gap in the market, right? And some of the larger, stronger players are able to lend. And that is why MFIN has made a request to the government for having a refinance facility for the entire microfinance NBFC MFIs to see whether the government agrees to that or not. And but the fact is that the industry, I would say, is out of the woods, if I might use the term, out of the woods. It is in that long tail normalization period, a little bit of liquidity will help, because what happens is liquidity also starts the cycle also. But couple of points. Rural wage growth rate has been good, 6 to 8%. Rainfall has been good, right? Kharif crop arrivals are good. So I expect H2 to be significantly better than what we saw in H1. And I think Q4 is when you will see normalcy in this industry, subject to liquidity coming back.
All right. Hi, Mr. Roy. Good to have you in the studio. And I recall the last time we chatted with regard to that Karnataka issue. You told us the efficiency will improve in October. You've been spot on. October, November is when things have been improving out there. And most of the guidance as well you've gone to. And that explains why from March itself, I think the stock is up 75%. That said, let's focus on a few numbers since, you were drifting us towards that. The return ratio, that's going to be important. You're guiding for better ROAs as well as ROEs. So give us the number with the timeline and what the levers you have in place to take you up. I think on ROAs, you're guiding for a 40 basis points improvement. Tell us by when and the levers as well.
So we're currently, last quarter we were at about 2.41.
Yes.
So what we have guided the markets is directionally we should be in the range of between 2.8 to 3%. Exit FY27, which means around March of FY March 2027 is when we will be at that particular level. Right. So, and obviously a couple of things here obviously has to work. The credit cost has to come down. As you know, our credit cost was 2.4. Our ROA and credit cost actually were the same last quarter, 2.41 and 2.41. Right. So, obviously the credit cost has to come down, and the various initiatives that we have been doing is obviously showing a positive impact on the credit cost trajectory. The microfinance sort of industry also has to stabilize. You know, the fact is that we got a burst of sort of NPA coming in from the Karnataka sort of challenges, right? And obviously we delayed the recovery.
Right.
Now I expect FY27 to be a period, every quarter will improve the trajectory on the credit cost, and we have said that the credit cost will directionally move towards 2%.
Right. Because of the AI initiatives also, you said 2%.
Yeah, it will.
All of it put together.
It will take time to show up because we have a drag of a back book, right? So, for us, the situation is peculiar. We have a newly generated book through some of these tools, which is showing excellent results, and there is a drag of a old legacy book, which I called. This will take time to sort of show up in numbers, and it will do so in Q1 and Q2 of next year, next financial year. And I'm very, very confident that, you know, and it will also have an impact on the collections costs as well. So on the cost, etc., cost efficiency, will see an impact. NIMs and fees, we have guided that, you know, NIM plus fees together, we will try to guide between a corridor of 10 to 10.5%.
Okay.
We'll try to maintain that. And with microfinance coming back, and it's a high yield product. And plus also we have added gold loans. We are adding 200 branches this year. We'll add 300 to 350 branches next year. So basically for the next sort of 1.5 years, we'll be opening one gold loan branch every day.
All right. Tell us a little bit more about that gold loan portfolio, you know, because you have tapped that market just in the recent past. And I think the book as of now is around 1,300 crores.
1,500 crores.
1,500 crores. And as you're saying, you're looking at opening more branches.
Yes.
And you're looking at penetration out there. So going by all these estimates that are put down, what should the book look like, say by FY27 and from thereabout? You know, targets on the size of the book and timeline as well.
So we expect to be anywhere between 4,500 to 5,000 crores of book exit FY27. That's what we intend to do. And by that time, we should have... See, we got 130 branches. We'll be at 200 branches this year. So we'll be about 330 branches by March. We'll add another 350 branch by next year. So we'll be about 700 branches odd.
So I mean, clearly microfinance is coming back. You're building the gold loan business as well. Retail has been anyway doing, you know, fairly okay for you. In terms of just growth of the book overall, AUM growth, I think you've guided for 20 to 25% for this year, whether you're on track for that or not. And even next year, I mean, what is the steady state growth rate you're looking at now with microfinance issues largely perhaps behind us?
See, festive periods was good, right? And the fact is that, you know, I'm reasonably confident that and microfinance is coming back, you know, gold loan disbursements are good. You know, two-wheeler, you know, we saw a very good month in October, though this month it has sort of stabilized to a large extent and come into a normal trajectory. I'm pretty confident that overall for this year, we should be at about the 20 to 25%, you know, benchmark. Next year, again, we have to see, you know, next year, again, if you see microfinance, you know, I think this business, the safe speed for this business is between 10 to 15%, right? But, you know, we will have a couple of high growth businesses. Personal loans has been growing at 40% plus for us. And if you look at our digital origination of personal loans, we probably are growing at about, you know, on a quarter-on-quarter basis, about 30-40% on that as well. So personal loans will continue to grow well. Micro-LAP, small book is growing well. Gold loans will go strongly. SME business for us, small base, but it's been growing well. We saw a little bit of risk on the lower end, sub 20 lakhs, but that's not a very large part of our portfolio. So we continue to grow well on that as well. So overall, again, next year, overall, and as we sort of announce our Lakshya 31 targets, right, in the month of April of 2026, we will want to be within that corridor because the fact is the targets that we are taking, you know, between 20 to 25% is a safe speed to grow any sort of retail lending business. And the fact is that in our investor day, we articulated there, we are a risk-first, tech-first, diversified financial player. So we will grow to the extent that we are comfortable with risk. Now, if that means that shaving a couple of basis points from the growth rate, so be it. But 20 to 25% is good enough.
I think that'll be good enough for the market as well. If you're able to do that consistently, I think the key word is safe speed.
That's right.
Safe speed. You don't want roller coasters.
And just quick, last 10 seconds, allow me to add this. The Japanese are lining up with money. People from the West Asia are lining up with money. When it comes to Indian BFSI, there are deals galore. Some of your larger NBFC peers, there's still a lot of buzz that they could be looking at.
You've warmed him up. He knows what's coming.
You know what's coming. And you have so many growth plans, right? Plus you're spending on tech, all of that. Yeah. Capital needs, would you look out for a fresh equity partnership?
Not really right now, because you see, we had a equity partnership with Bain for a long period of time. They exited, and after that, I think we are well capitalized. Our parent, obviously, has got deep pockets to attend to any of our capital needs. So as of now, I think our focus is on execution, execution, and execution.
All right. Thank you very much for dropping by, sir. Really appreciate it. And thank you for joining us here on CNBC-TV18. Great chat. 80 points, by the way, on the Nifty. We're at about 26,280. It's looking solid at this point in time. We'll take a quick commercial break here. We'll stay with the financial services business, but talk about a very different kind of financial services business, exchange business. So the country's dominant exchange, NSE, National Stock Exchange, on the other side for a chat on, timelines to a potential IPO. Sriram Krishnan is going to be with us. And of course, individual segments, how they're holding up, etc. Stay tuned, coming up. Okay, welcome back. We've got the market, which of course is at a new high, 26,295 as we speak. So, great occasion to actually speak with, the dominant exchange in the country. National Stock Exchange is, with us. And we're going to talk about numbers, segments, and of course, when we will see the NSE IPO. Sriram Krishnan is Chief Business Development Officer at NSE. Sriram, great to have you with us here. We talk about Nifty all the time, morning till afternoon. So good to speak with the exchange behind it. And I'm assuming it's been busy with primary market action, a lot of secondary market action. Trading volumes have been pretty good. The one thing which you would acknowledge is a great deal of interest to everyone is timelines to a IPO from NSE itself. So talk to us a little bit about the background. Where is it? Where it is at? Have things moved? And just that'll help.
For NSE, I think more than our own IPO, it's the existential objective to help other people raise capital. I think we've done that so effectively in calendar year 2024, where 268 companies got listed on NSE, raising about $20 billion. This year is no different. The fund mobilization seems to be quite aggressive. And already we've seen more than 1.1 trillion raised in equity and about 12.5 trillion raised in bonds. And this year looks very, very exciting as well, with many, many large IPOs lined up in the next weeks and months. As far as NSE's IPO is concerned, that's dependent upon the regulatory clearances, and it will happen when it has to happen.
Little more than that possible, Sriram? Have things moved with the SEBI settlement fees for the co-location case, right? What's the provision behind it? What's the timeline? 1,300 crores provision was made. Some sense will help.
The information available in the public domain is all that I can refer to, but there's nothing more as such that I'll be able to say on this one.
Sriram, if I could just ask, so are there any other approvals from any other agency that are pending, or all the requisite approvals for the IPO, are they already in place?
Normally, for a company to go public, the regulatory clearances are important. We are waiting for that.
And these are clearances from SEBI or any other? I'm just trying to understand from a regulatory perspective where things stand.
The industry regulator has to approve first, and then SEBI has to approve. In our case, SEBI is both the industry regulator and the capital markets regulator. So that's what we are waiting for.
All right. Hi, Mr. Krishnan. Good morning and good to see you, Ben. Let's talk about business then. How's the market share holding up? The erstwhile smaller player, BSE, is making a bit of a push in the options side of things. What's the updated market share, both in the cash as well as the F&O market, if you could help us out with the recent numbers?
Sure. Now, in the cash market, our market share continues to be about 93-94%. With almost all the large marquee deals happening on NSE, it's been a bit, busy actually. So cash is doing well. As far as equity options are concerned, if you look at August 2025, our market share was 76.9%. And I'm picking August 2025 because effective September 1st, 2025, we changed our expiry day for index options from Thursday to Tuesday. But if you see since then, if you look at November 2025, for example, our market share in equity options has gone up about 10% to 87%. So I think the market participants have accepted well to the change of expiry day from Thursday to Tuesday. And Tuesday seems to be working well for us. Particularly if you look at each of the days as well, I think we are gaining market share significantly. And that's a good direction to get into. If you look at the other segments as well, electricity futures, for example, which we launched in July 2025, our market share is consistently anywhere between 75 and 80%. And electricity futures is a great example of how NSE makes products actually work for the value chain participants.
All right. So just to clear the air, you're saying that the equity options out there, the change in the weekly expiry has actually made a difference with your share going from 75% to 87%, if I got that number correct.
Absolutely. 76.9 to 87. Yeah.
87%.
76.9 in August, 87% in November.
Okay, got it. If you could also help us out with any kind of communication from the regulator, because there was that fear that the weekly expiry will be pushed back. There'll be some kind of regulations that will come about. Have you all heard anything, or do you all have a few months now where at least we continue to see the weekly expiry? Just wanted an update on that front.
I think on your channel, I saw the SEBI chairperson clearly articulating that if at all any changes were going to be made, that would be based on a consultation paper and due process, etc. So we have not seen any consultation paper yet. And I think whatever happens will happen after due consultation.
Have things, Sriram, have things moved at all? Have they asked you for more data? We've been reporting and over the last many months that maybe it's not going to be that hammer blow which many were expecting. The SEBI chairperson at our event, as you said, at the Global Leadership Summit, on stage said, well, and on other occasions as well, that we've done a lot in terms of what needed to be done, and we will continue to evaluate as we go forward. Is that the right kind of interpretation from your perspective? That
I think so. On the contrary, many brokers have in fact gone and represented to SEBI, requesting that Bank Nifty be allowed on Thursday, because that used to be the biggest product in the whole world within the umbrella of equity derivative contracts. And I think the market participants have been missing Bank Nifty for a while now. And, as an additional weekly expiry, if that's permitted, let's say on Thursdays, I think that will really help the market. And, hopefully, SEBI can permit one more weekly expiry per exchange. And that can, in fact, make things even more better for the market participants. If you see the broking revenues, they've gone down almost 50-60% for most of the large brokerages. There are a number of changes we have gone through in the last couple of years. I think it's time to recoup and recharge a bit.
So brokers have made representations. You have as well?
No, we are here to deliver what the market wants. We know that the Broking Industry Association had made a representation, and that's why I refer to that.
So on this, any indication? I don't know if you have heard anything from the regulator. Is there a timeline? Are they reviewing these proposals over how many weeks, or is it months? May they come out with some sort of a view? Any indication on Bank Nifty specifically?
So we are not aware of any specific developments or indications as such after the representation was made. But we know that the broking industry wants one additional weekly expiry per exchange and a possible bank nifty to be allowed on Thursday.
So there is a possibility that a second product will be allowed, but it won't. I'm guessing if at all the regulator is looking at it, it won't be limited to just one exchange. Then it'll be available to all exchanges to allow a second product. You believe that can happen?
No, this is the representation made by the broking association. We don't know if the regulator will approve it or not.
Sriram, there are other exchanges looking to sort of launch products, etc. as well. NCDX, for example, they've raised 2 rounds of money. There's one more, the Metropolitan Exchange. I mean, just how do you see all of it, and any perspective you can share there?
No, I think it's an interesting development, and the other exchanges obviously have a big task ahead of them. They have to obviously do well in the cash equities first to be able to succeed eventually in equity derivatives. I think that was the regulatory thought process as well. So it'll be interesting to see how they come out with their strategies and try to win market share in this space. India is a growing country, and there's enough space for more exchanges to grow and thrive. And we are very keen to welcome all of them.
Just last question, Sriram. As you look ahead into 26 and beyond, what product innovations, any particular segment which you will focus on to build out as the next growth driver? What should we expect?
So a couple of things that I will highlight here. This is a very important question. And, in the last couple of years, a number of market participants have been asking us to build more racks in co-location because most of the players today are technology oriented and want to be present in our co-location. So we have actually moved employees out of the NSE building and are slowly turning it into a full data center. And we've now turned rack surplus. So anybody who wants a rack can immediately get it on demand. So that's one. Secondly, we have approval from the capital markets regulator to launch a few contracts, a couple of contracts, particularly the 10-gram gold futures contract and the Indian natural gas contract. So the natural gas contract based on Indian prices. So these two are approved and ready to go live. So we will announce the launch of these products very soon. Apart from that, we have also applied for the launch of the Brent crude oil contract, which will hopefully get approved soon. We also await approvals for launching corporate bond futures and government bond futures. Hopefully, these two are interesting and exciting products, given that the specialized investment fund framework has also been launched recently by SEBI and has gone live from many asset managers domestically. So there are a few products that are coming in, and we can also look for some exciting participation from retail customers in particular.
Okay, all right. So lots lined up, and I think that's what your shareholders would like to hear as well. Thanks very much, Sriram, and always great speaking with you. I hope we do this more often. Thanks very much for coming on CNBC-TV18. Good luck. All right, well, 70 points, markets, there, roundabouts there. 26,277 is the index value at this point. Siddharth Rai is with us of Stockbox Technology. Siddharth, good morning. Great to have you with us here. Just a quick look at the price action, and what would you recommend for viewers?
Hi, Prashant. Good morning, and thanks for having me on the show, first of all. See, Prashant, if we talk about Nifty, the last 45 minutes or so on the index just seem to be an extension of the momentum which we started building, started building up in the index in last week. We just discussed it on Friday that no matter how many dips or consolidations we see in Nifty from here, as long as the index is above 26,200, 26,100, these two important levels, we must be staying bullish on the index. My view remains quite the same even now. Now that we're also trying to touch 26,300 again and again, Nifty seems to be very well positioned to be moving towards 26,500 and 26,600 just in the next couple of days. So this is a very good time to be staying bullish on the index.
Okay, so time to be bullish on the index. Siddharth, what about stocks?
Yeah, sure. So I see two stocks. Both of these we have to buy. The first one is Uno Minda. The stock has been on a weekly basis. The stock has been making higher highs for the past 2-3 weeks. So the momentum looks very good, and the stock seems very nicely placed for an good up move from here. So Uno Minda can be bought right now. The spot is trading around 1334-ish. You can buy buy it here. The stop loss will be at 1310, and the targets being the first target 1375 and the second target 1395. The second stock is from the two-wheeler space. The name is TVS Motors. See, the whole two-wheeler space has been buzzing for the past couple of months now, and TVS Motors now, I think it will be one of the outperformers in this space, as today it has almost made an open low. It started running just from the point where it opened. So TVS Motor looks very good right now. It can be bought. The spot is trading around 3620, somewhere around that. We can buy it here. The stop loss will be at 3590, and the targets being the first target 3680, the second target 3720.
Okay, all right. Thanks a lot, Sid, for joining in and giving us those calls. For the time being, we slip into a short break. On the other side, Manisha is waiting for us. She'll tell us what's going on in the commodity markets. Stay with us.
Welcome back. Equities are having a steady morning. Most of the gains are intact, 70-odd points up on the Nifty. Let's find out what's happening in commodities. And it's all sparkles, as Manisha was telling us, in these precious metals. Silver has indeed turned into gold. Should I say that, Manisha?
Yeah. And I want to say your markets may be steady, but look at precious metals and absolutely making all-time highs onto that one. I want to start with silver, really, because we're looking at an all-time high onto this one. It's trading at record highs. 57.80 is what we've done. If we can show the latest prices, we'll know what we're trading at right now. But the Chinese inventories have dropped to a decade lows, and that clearly seems to be supportive. If you look at the Chinese silver exports, they surged to an all-time high for the month of October to the tune of 660 tons there. And also US has added silver and copper in its critical mineral list, and that also has given it that re-rating where you're looking at silver running up, and that is exactly what we are looking at in sense of copper as well. So while the US copper prices are trading at a 4-month high, you have the LME London copper prices trading at an all-time highs above $11,200 a ton there. I mean, we've seen very, very strong gains come in for copper most part of this year. This is on the back of planned production cuts that we are seeing coming in from Chinese smelters. There are a series of mine disruptions that we have seen come in from major producers in Chile and Peru as well. And then apart from that, the fatal incident that we saw in Indonesia's Freeport-McMoRan's Grasberg mine, the reports there indicate that the full resumption of all of this trade perhaps would happen only by 2027. And then you have recurring protests happening in Chile and Peru. And then Codelco has offered record high prices to Chinese buyers as well. So they're trying to sell more to US and less to China. And is the reason you've seen that disparity come in the international markets. But then again, it's not just about silver and copper. Take a look at palladium and platinum as well. It has to do with thin London inventories that has led to these two PGM metals trading on the positive side as well. It also has to do with uncertainty surrounding US trade policy that has led to safe haven buying coming in. And then it has been about private investors increasing allocations. So when you look at fund allocations for 2026 as well, the expectation is that the precious metals, base metals, minor metals perhaps could be looking at more money rotating there. The mining is concentrated in South Africa and Russia, and we have seen concerns there is another reason that you have seen the prices go up. And then when you talk about the demand prospects, well, whether it has to come in from EV, data centers, renewable energy, you are going to need many of these metals, and that would continue to keep it in good favor. Take a look at the prices now, and that really is a sparkle. Silver is gained up by 98% in this year until times, almost doubling from where we started in this year. It's been a 90+% gains in case of platinum as well. Palladium and gold almost equal with 60 to 68% of gains coming in there. And then take a look at the other metals also, because we're looking at copper gaining by 32%. It's a 30% gain coming in for tin, which is trading at a 3-year highs right now. And then you have aluminum prices up 13% as well. What the markets will watch out for going forward from here is going to be that 87% of a probability of a 25 basis point rate cut. That meeting is happening on 10th and 11th of December. But ahead of that, it also is going to be about the US manufacturing and payroll numbers that are expected in this week. That is going to move all those markets as well.
Okay. All right, Manisha, got it. Thank you so much for that. So silver indeed shining bright. That's the big commodity headline this morning. We'll take a quick break on that note, but coming up on the other side, Lata will be speaking with the CNBC-TV18 Citizens Monetary Policy Committee on what to expect from the RBI on the 5th of December.